Vijayshri, your host for today, and I welcome you all to NASSCOM Tech Series titled Digital Disruption, What's Next for Insurance. We have a great lineup of speakers and panelists who will share their insights and expertise on the latest trends and challenges facing the insurance industry. Our theme for today's event is digital disruption, and we'll explore how technology is changing the way we think about insurance and risk management. Before we begin with the session, I would like to thank Entity Data Services for partnering with NASSCOM in this tech series. My hygiene check, I would request everyone to please put your mobile phones on mute. So now, without further ado, let's get started with a welcome remark by Mr. Bhaskar Verma, Regional Head, NASSCOM Karnataka. I would request Bhaskar on the stage. Over to you, Bhaskar.
Vijayshri, I know it's a tough and a painful thing to come to Taj MG Road, and we all working from home. So thank you for that, and very warm welcome. I will not get into the insurance and digital disruption, what we are doing. However, how many of you heard about NASSCOM? You have worked with NASSCOM. Can you raise your hands? Okay. So I will just go with a little quiz. And if we can pass on the hand mic, anybody who wants to answer what NASSCOM does? Anyone? You can raise your hand and we can pass on the hand mic. Okay, to the gentleman here. Can you pass on the mic, please?
Hi, this is Jay Kumar from Entity Data, and I know about the NASSCOM right from 1990s when promoting all the software industry in India, providing the ecosystems. Devang Mehta was a very well-known figure at the time, so I know about the NASSCOM.
Okay, sure. Anyone else want to take a stab? What NASSCOM does? Gentleman over there, at the back. I'm just trying to make it more interactive than a boring session.
I heard about. I'm still a fresher in Entity Data.
Super.
It's been 6 months, and we were at home from our online classes until now. So, I heard about NASSCOM in my college first when I was in engineering. What NASSCOM does, what I've seen is I have done some NASSCOM certificates. So, and I have seen NASSCOM conducting CSR activities where all these tier 2 city colleges, they are getting certificates and getting cutting edge tech training from NASSCOM. So that is what NASSCOM does, and it is an association of all software companies.
Sure. Anyone else want to take a step? Last one. Before, why I have asked this question, I will come to that. Actually, I thought I will not go to the front desk, but yes, okay.
That's fine. If somebody else.
No. Please go ahead.
Yeah. I'm from Entity, so we associate with NASSCOM from quite long, right? I'm from Hyderabad. We are associated with IC also. Yeah, NASSCOM is an industry body that helps in building the ecosystems, working closely with the governments, defining the policies, and also at the same time working closely with the when I say ecosystem, colleges, industries, to make sure that we go from where we are now to that $300 billion export market. That's what we want to build. So that's what NASSCOM does.
Superb. You made my life easier, so I don't think I need to talk anything. However, I will just touch upon the strategic imperatives of NASSCOM, what we do, and why we are doing this tech series. I will just try to encompass both. We have 4 strategic imperatives on which we work on, starting from innovation to talent. Talent, the fresher gentleman he has talked about, we work very closely with academia. We help freshers how they can be certified, and they are ready to work directly wherever they go. So that is something from the certification, from deep tech, we help them. From the market access side, this is basically more towards the SME criteria, wherein we take them to different parts of the world and they can set it up there. And the 4th piece that you have talked about on the trust side, which is on the policy majorly. And we work very closely with state and central government. and help ecosystem and our industry how we can grow. So I will again come back to the innovation piece, why we are doing this tech series. The simple agenda and the motto of NASSCOM is how we can build ecosystem to create that innovative mindset. And I always believe innovation is not something you have to go to the lab. While you are doing your regular work, that's the mindset that you have to build. We have 10K startup, wherein we have right now around 5,000 plus startups incubated and actively working with us. We help them to grow. And as I said, the motto is how we can build India and how we can make India as an epicenter for innovation. So with that, my team is here. If you need any help, we are there to help you out. And we are working in a collaboration with NTT Data. So thanks for that, NTT Data, for collaborating for this tech series. If you have any questions, I think my timer says 2 minutes I have. If you have any questions, I'm happy to answer. Otherwise, I will hand it over to Vijayashree. Okay, any questions? None, so thank you very much. As I said, I will not talk about insurance and digital disruption. We have experts here who will touch upon that. With that, over to you, Vijayashree.
Thank you, Bhaskar. Moving on next, I would like to invite our panelists on the stage, Mr. Niraj Singhal, Senior Vice President, Consulting and Digital Transformation Services, NTT Data Services. Niraj is the Senior Vice President responsible for international consulting for NTT Data Services. He currently manages a team of business consultants that provide high-end consulting and specialized business expertise to banks, insurers, healthcare, and manufacturing institutions around the world. Niraj has authored several papers around digital enterprise transformation and innovation in reputed national and international journals and won awards. He has a strong focus on creativity and innovation and also was the recipient of the Innovation of the Year Award by Dell India in 2014. Niraj started his career with Tata Administrative Services, wherein he worked as strategy consultant for Tata Group with experience in consulting for diverse companies, including steel manufacturing, e-marketing, and e-business. Over the last decades, Niraj has had an extensive exposure across industries and functions, having worked with NTT Data, Dell, TCS, Tata Tea, Titan, and Unilever Group. Moving on, I would like to invite on the stage Mr. Nimesh Mehta, Chief Information Officer, National Life Group. Nimesh Mehta was appointed Senior Vice President and Chief Information Officer of National Life Group in 2018. He focuses on all aspects of technology operations to effectively align business and technology strategy with a customer-centric focus. He was previously the head of life and annuity operations and also served as the Chief Strategy Officer and Chief Technology Officer at the company. Moving on, I would like to invite Mr. Chirajeet Sengupta, Technology Services Practice at Everest Group. Chirajeet incubated the Cloud Research Program and more recently launched the Digital Services Research Program. Chirajeet works closely with the global enterprises, helping them navigate through service and technology transformation choices. Chirajeet also advises the world's largest technology service providers on the growth and competitive issues. So, over to you, Niraj.
Thank you. Can you guys hear me? All right, excellent. So I thought when Bhaskar did his introduction and he said, who's going to answer these questions, he had a bag of goodies for each of you. So I've taken a cue from him. I don't have a bag of goodies as well. But what I do have with me is two very knowledgeable gentlemen on insurance. So that's the topic for today. We're going to talk about disruption in insurance and what's next for insurance in the next 10 years. So let me take you through that journey, and I want to make this as interactive as possible. I want to start off with an icebreaker question, which is probably there in the minds of almost everyone. So the question really is, and I'll start with you, Nimesh. a lot of times, there is a talk that the insurance industry tends to be a little bit of a laggard compared to other industries like banking from a digital disruption perspective. Where do you really see insurance from a digital disruption standpoint? And do you see LNA a little behind PNC as well, specifically?
Perfect. Is this thing on? Can you hear me? There
Yeah.
we go. Much better. Great question. I think first of all, as you think about, I love the word digital because everybody wants to talk about digital. And what's the other side of it? Analog? I don't think we talk about that. But as you think about the word digital, if I go around this room right here and I give everybody a piece of paper and say, write down what you think and what you mean by the word digital, there's probably 200 people in this room and I'll get 300 different answers. So I don't think we've figured out what digital is, but I'll say something pretty controversial out there, is I think digital is yesterday. I think it's past, we're way beyond it, especially as we think about the last 3 years. And COVID happened, right? We were just not connected as human beings in the last 3 years. And I think when I think about digitalization, I think we've moved beyond that, and I think the next concept that comes into the world of insurance, whether it be PNC, LNA, is the concept of humanization. And I think the twist to this is we've been spending a lot of time in which we're taking the time to build digital relationships. And I think the slight twist to that is taking the time to use digital to build relationships. So I think that's where the next step of the world is as insurance is concerned. And I think even beyond insurance is the concept of humanization.
Interesting. So, Nimesh, if I rephrase that, you're saying human beings come first, technology is an enabler. That's exactly what you're saying. Excellent.
I'll give you a great example of this and how it seems to be working. Who here has used a GPS for the last 5 years? Most people, right? I mean, I can't even get out of my backyard without a GPS. So remember about 5 years ago, when you had a GPS on in your car, what did it say? It was always a lady or a guy that came up and said, in the next 100 meters, make a right turn. I don't walk around with a measuring tape. I have no concept of what 100 meters is. Now, when you hear about it, the humanization is the GPS will tell you at the next light, make a right turn. I mean, that's the concept of humanization. That's how we behave as humans and create that connection using technology.
Excellent. Chirajeet, if I was to ask you the same question, what would be your reaction?
Sure. So first of all, thanks for having me here. It's really a pleasure and a privilege. I think if you really think about insurance as an industry, insurance fundamentally acts as an aggregator and a broker of risk, right? That's really at the heart of the insurance business model. And I think that has been a very transactional model over the years. And I think what we are really doing is trying to move away from that model. And we are trying to move from the model of being an assurer to being a guardian, right? And I think that is difficult in a lot of ways, and that's complicated because your entire business model is based on risk aggregation. But when you're trying to be personalized, when you're trying to be humanized, you are really trying to get to micro segments. You're really trying to understand each customer as human beings and as individuals, right? And that's not always easy. At the same time, I think if you really think about insurance, there's a reason why technology stays or doesn't move at the pace that we always want to, right? So, for example, in life insurance, you can stop selling a product, but you can't kill a product till literally the last person who bought that product has an end of life, right? You can't, right? So how do you rewire systems? How do you move things along, right? So, but I think the future is becoming very interesting, and I completely agree with Nimesh that the future is really around how do we use technology to improve the customer experience rather than having technology for technology's sake, right? The good news here is we do have the technology, but I think the trap that we must avoid is to think that technology is the solution. Technology is not the solution. Technology is the enabler of the solution, right? And I think that's really where the focus of the industry needs to go moving forward.
Excellent. So, you know, when we were asked to do this panel discussion, we said we're going to have a sit-down discussion. But we changed the format a little bit to make this more interesting. So the way we're going to structure this in the form of 3 modules. And if you look at what life insurance customers really care about, it's only 3 things. So what are those 3 things? The first thing is know me, which is know everything in terms of what I need. The second thing is reach me or reach for me, which is stay connected with me. Now, it's very easy for a life insurance company to forget a customer because life insurance is sold only once. The only other time you remember the customer is when he dies because there's a claim that needs to be paid out. So how do you connect continuously with your customers and stay current is the second most important thing. And the third most important thing is care for me. So this entire concept of well-being and how technology can help from a well-being perspective. So those are the 3 modules that we're going to talk about. So the first module is going to be 15 minutes. I'm going to show you a set of slides which are a little provocative in India to that extent and perhaps across the world as well. And then I'm going to ask our panelists to talk about their reactions to how technology is really enabling this change. Okay. So the first concept, which is know me or know your customer. Now, just imagine yourselves a day in the life of yourself, right? So first of all, you got to wake up, which means you got to be alive. You have to have life insurance, which protects you. Then you go for a jog, which means you measure your steps. And then you have to have, through the Fitbit, you kind of measure how much you've done. So you need to have health insurance. Then I take a car and I go to the office. I need to have a car insurance. I need to have a regular source of income, which is a personal protection plan. And then finally, I have to have a good night's sleep, which means I need a burglary insurance. Now, if from a customer-centric perspective, you need all this, why are insurance companies operating in silos? There are different companies giving me different things. Food for thought. Now, this is a very interesting concept of genetics and genome. And, you've got more than 3 billion microbiomes on your body. So these are viruses and bacteria that have lived with you, that have really taken all the stresses that you've gone through. So imagine just like you cut the trunk of a tree and you got those concentric circles which tells you what the tree has gone through, what's the age of the tree. The viruses and bacteria that live on you, you take a swab of that, put it through a microscope, develop an AI model, and I can predict with about 70% accuracy what diseases you're likely to have in the next 10 years, and with lesser accuracy, how long you're going to live. So just imagine the possibility of that for life insurers. And then again, I was talking to our finance colleagues, and they told me we've got a group insurance, life insurance policy. And we said, hey, you know what, how much do you know about all the employees within the company? So there are 10% of my employees that take 18 days of sick leave, 15 days they're in the hospital, and they always do that year on year. Should the premium change based on what they're going through? Should the premium be customized, so the products be customized depending on the employees? So insurance companies tend to be going more wider rather than deeper. And then you've got a lot of these insurtechs which have come in with very jazzy tools like facial recognition. I was talking to a company which said, hey, I'm going to take a camera and I'm going to put your veins there. You guys can hear me now? Thank you. So I'm going to take a camera and I'm going to see your vein and I'll tell you what the risk of underwriting a policy is for you is. So it's touchless onboarding and touchless underwriting. That seems to be the other trend. But when you do all this, obviously there is compliance and there is regulation. And the governments get very, very scared when you talk about knowing the customer in such an intricate way. So data privacy, confidentiality, regulation has a big impact on insurance. So really starting with my next question, and I'm going to pose this to Nimesh. Customers in many ways still prefer a human interaction rather than an automated response. Where do you think insurance companies are in this regard? Nimesh?
You know what? Maybe I'll use that mic because this one's not working. Is this better? There we go. So I think I'll go back to the same concept that I started with, which is the concept of humanization. Again, think about COVID. All of us were all together, stuck in our homes for the longest period of time, and what we were missing is that human connection with people, right? We were working digitally, we were being all effective, efficient, technology was moving on. And there was something that I asked my team, in the last 3 years, tell me something that you came up with that you hadn't thought about before and you executed. Guess how many innovative ideas our entire team thought about in that 2 or 3 year period? Any wild guesses? Pretty much a big zippo, nothing, right? So we got really efficient, we got really good at doing our work. What we stopped, we took a lot of withdrawal out of the bank of innovation. And I think as you think about this and you think forward and you think about that human connection being required, is one of the things we have to really be careful and think through, is what is our culture going to be like, whether in the insurance industry or just the workforce in general, is how connected are we going to be, what is that going to feel like, and what is that human connection and that humanization going to be? I think we've gotten embedded in our technology, and a lot of times we are super involved in what I call sausage making, right? We like the intricacies of the technology. We need to start thinking about the impact to humans as we try to deliver the technology that we're delivering. There's a lot of technology we're putting in place in the insurance industry, if you think about it. Yes, we think that we're laggards, but as you just pointed out, once you put an insurance policy, a life insurance policy on the books, you better have a system that can hold on to it for 80 years. And trust me, I'm dealing with things that are older than me that I still have to live with. And so far as an insurance industry, what we've done really well is gone around the periphery and we've put lipstick on the pig. But at some point, we've run out of makeup, right? We still got to fix the pig. So I think what we're doing right now is we need to figure out how to leapfrog so we can create that human connection with people that is probably more necessary than the technology delivery. So execution.
Chirajeet?
Let me try and be a little bit provocative here. How many of you have had the experience of buying health insurance or life insurance over the last couple of years or so? Could somebody from the audience who raised their hands rate their buying experience on a scale of 1 to 10? Gentleman at the front? 2. 3. Somebody else? I see a 4. Yeah, somebody. 3, 5. Okay. 4, did I hear 4? Okay. I'll tell you my experience, right? Yeah, I'll tell you my experience. So you're talking about knowing your customer, right? So I was buying health insurance for myself and my family last year, right? And my wife is mildly diabetic. She's kind of on the borderline pre-diabetic kind of phase. And, you have these long, infuriating calls where they ask you hundreds of questions, right? And my wife is very conscientious. She's very detail-oriented. She's very conscientious about, doing the right thing at all times. So they're like, okay, what illnesses have you had? What surgeries have you had? Blah, 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 right? And the agent at the other end keeps asking my wife, ma'am, are you sure your sugar levels are this? Are you sure you had that? Are you sure? No, I mean, are you absolutely sure, right? And my wife, being, who she is, she's like, yeah, I just told you, right? And then I got a call from the agent who was selling it to me. He's like, sir, ma'am said these things, your premium will be too high. Okay, you should have told her. I said, boss, if something happens and I need that insurance, right? What's going to happen, right? So I think when we talk about humanization and when we talk about technology, right, I think we need to move to a stage of stage where technology and the human, right, work in tandem. So why can't onboarding happen in interactive ways which are less intrusive, right? Why can't this whole process of asking questions and so on and so forth, right? How can we make it less intrusive, right? And more authentic, by the way, right? And how can we really know the customer and trust the customer and generate trust in the customer? So those are the real challenges. And I think technology also has a big role to play when we are talking of humanization in making that human experience better, right? So can we train our agents better so we don't have this kind of situation? Can we train our validators better, right? So those are the real challenges when you talk about knowing your customer, right, and making it real on the ground, right? So we can all put Fitbits and everything and so on and so forth, right? But at the end of the day, it is humans, agents, distributors, brokers who make a real difference. And how can we use technology in tandem with those human beings to make a difference in the consumer's experience?
So, Chirajeet, I'm going to stay with you. You know, I mean, you've opened up a Pandora's box when you talk about technology, and it means different things to different people, right? So when I talk about KYC, which is know your customer, what technologies are we talking about? Are we talking about the same stuff that we saw on the slide, which is microbiome analytics, wearables, or are you kind of referring to something else?
So I think there's lots of stuff. So at the end of the day, data lies at the heart of it, right? But when you think of how that data gets used, how that data gets protected, how that data gets secured, right? And how innovatively can you source that data, right? That's where the real magic happens, right? So we're talking of Fitbits, wearable devices, etc. We're talking of facial recognition to get to a 70% recognition of, potential liability further down the line. Can we also mine third-party data, right? Can we look at third-party data around demographics to understand what is likely to be a tailored insurance product for a particular individual based on his or her demographic status? So for example, can I say that, people in a certain socioeconomic demographic cohort in a particular metropolitan area in India like Bangalore, right, are likely to start a family between X and Y years of age, right? And that's where they're probably going to need additional coverage, right? So I'm just making up these examples, but it's really about being very creative about data and sourcing the right data and being accurate in our predictions about what's going to happen to a particular individual. Now, when you do that, you obviously have big challenges around security, privacy, right? Regulations. How do you deal with some of those? And we are going to come to some of those conversations, I'm sure, further down the line.
I'll add a little bit to this. I'll give you something. You talk about data. There's an old saying that goes, "In God I trust, and everything else there's data." I'll tell you a little bit about the things that exist today and then the art of the possible, right? I mean, you just talked about questions and medical histories. A few years ago, when you wanted a life insurance policy, at least in the U.S., that was decently sized, somebody would have to come collect blood. It would be a pretty black hole after that. 45 days would go by. Some doctor would send some statement back, then some underwriter would read it, then something would happen, and magically you would get a policy. I mean, that was the world of insurance. And if you think about an experience from 0 to 10, I think it was like a 2, because you didn't know what was going on. So today, at least in our organization, what happens is you send in, you pretty much are typing in on an electronic form. As you're typing in, we're pinging databases that don't require any blood or anything. This is prescription databases, financial databases, and other things. And we can underwrite you up to $3 million pretty instantaneously. And instead of waiting 40 days for a policy, we can issue it in 70 seconds. So this is possible even today, But where is it going to go next, right? So instant issue is something that has become the word. There's no more wait in time and let's hope that you get a policy in a little bit. But the next steps of the world and where we might go today is you think about, we're having this conversation. Why am I even filling out a form? Natural language processing exists today outside of our industry. Can we use these pieces of technology to be able to capture the conversation for what's required on a form, right? Whether it be medical, addresses, information, other things, you can pick up everything from a conversation. So getting data and using that is one piece from an input perspective. On the outside, when you think on the right-hand side of the equation, you've got things like NFTs. So this is where the blockchain starts hitting. A policy today is something that you hold and it stays on, like I said, for 80 years. What's something that can hold on and be very unique to an individual? I mean, this is a blockchain concept of having a non-fungible token as a policy. Then you've got all this data that you're collecting on the other side. What can you use for actuarial modeling from an artificial intelligence perspective to be able to say, what does mortality look like for a certain cohort with things that you've never been able to collect before, whether it be social media data, or it be your driving history, or it be your health history, or it being completely different things outside that we haven't even thought about. So I think there's a ways to go, but I do believe that the industry is moving in a direction of using technologies like even quantum computing to do things that we've not been able to do in the past. So I think the world is still just, surface has been scratched in the life insurance industry.
Thanks, Nimesh. That's really, really interesting to know. And, the word quantum computing tends to conjure a lot of emotions with all the implications to security and privacy and things like that. But let me, I've asked the panelists a lot of questions. Let me ask you guys a few questions as well, right? So according to you, which is the largest, no, not the largest, the second largest life insurance company in India? Anybody? The gentleman out there? If you can be louder, I don't know if the mics can reach you. Private, public, everything. The second largest life insurance company in terms of premiums collected.
ICICI Prudential.
No. Anybody else? I said the second largest. SBI Life, that's right. Give a clap to the gentleman out there. Well done. Okay, so let's, so what have we done so far? We've looked at, the first part, which is know me, understand what I want. Now let's go to the second part, which is reach for me. So how do you reach for me? Now there's a lot of talk of using the metaverse. So just imagine the possibility of mixed reality. So you get into a setting and you're exposed to different life insurance products. And then you test them out, you try them out in the metaverse, and finally you make a selection. And you handle all your objections on the metaverse from a customer perspective. Now this has also got a number of implications from an agent perspective, and I'll get Nimesh to comment on that in a minute. But just, simulating a tough customer experience. When you go and sell a life insurance policy is always sold. So you're going and selling a policy, there are a number of things that you got to convince the customer on. And how can you really use the metaverse to simulate that experience? Again, there's a lot of customer networks that get used. So today you can place an e-commerce order through WhatsApp for Flipkart. Why aren't insurance companies using customer networks and social media like WhatsApp and Facebook and stuff like that? Integration APIs, I think that's been talked about for a while now. So the fact that you've got third-party advisors and you've got financial institutions which distribute insurance products, how well are they connected with the insurance companies? And how can they reach the customers better? And then Nimesh talked about smart contracts and non-fungible tokens. Imagine your life insurance policy on a smart contract, and you've got these life-changing events which happen, which means that you need to trigger an additional cover or you need to trigger a rider. Can that all be done seamlessly through smart contracts? So there are a world of possibilities that exist with that. And then finally, I think the most challenging theme is that life insurance is sold one time. Should the insurance company also reach you only one time? or should it only reach you the time you kick the bucket to pay off the claim? How can the insurance company be more connected with you? So my question, Nimesh, again to you. We've seen a lot of, especially the LNA space, we've seen agents being the primary source of distribution. And then there is this talk about direct to customer, right? Really using technology to reach the customer directly. Where do you see the industry moving from an agency perspective? And what are the roles that you think the agents are going to play in this space?
You know, it's a great question. Who woke up this morning and told themselves, I need life insurance? Probably nobody. But you did wake up in the morning and probably think I needed car insurance because you had to have it. You can't take your car out on the street if you don't have car insurance. So I think there is a level of triggering events that need to take place to disrupt to see why somebody might need life insurance, when you need it in events in your life. So there is a need for that to happen, and as you rightfully pointed out, insurance still happens to be a product that is sold and it's not bought. Right? So the primary is there has to be a selling. Now, if you think about 5-10 years ago, the value of the agent and the agency was in the navigation of the insurance company. We're a complex, organism in itself. If you think of us like an amoeba, it's constantly changing. So the value of the agent was, can we help you navigate the insurance company? Well, now technology has changed that, right? So there's no, it's pretty simple, it's transparent. In fact, one of the things we talk about in our organization is, we need to be like Domino's. When you order a pizza, you know exactly where it is. It's in the oven, they put the topping on, they did this, they did that, it's on the way, it's on the motorcycle, they're at your building, they were up in the elevator, and there you go, your pizza is delivered. I mean, life insurance has come to a point where it's pretty transparent. Transactions are very transparent to the consumer. So the value of the agent is no longer in helping you fill out the form and, make sure you say the right things, because otherwise you're going to get bad results. That's gone. So what's the value of an agent? Because there is still absolute value. I think then the world has shifted and will continue to what I call shift left. And shift left is providing the advice necessary because you need to purchase a very complicated product and you're not going to do it every day. You're going to do it probably once in your life. You may do it again when your life situation changes, but you need to understand the complexity of that product. Also, life insurance now is not just a product that you use when you're dead. Right? That's the relationship building part that you have to have more. There's riders that you use when you get ill. There's things that if you're in the world and you appreciate charity and you appreciate, relationships with the community, there are riders that help you with companies have that will plant a tree, that will do other things that you could purchase as a part of that. You could use it when you're ill. You could take a loan out to buy a house. So there's lots of different taxation. There's other things that I think the advice, so the agent has to get a lot more experienced and be more of an advisor. And I think the agent's responsibility is going to become more of a life coach than anything else as time moves on. So I think that's where the world is going. I think it's already starting to shift, and I think it'll shift even more to the left.
Very interesting, Nimesh. So, Chirajeet, what do you think about direct to customer?
So, a couple of things. One is, if you think of alternative channels in insurance, that's been going on for a very long time, right? I think around 25, 30 years back, we started hearing of this term called bank assurance, right? Or we started hearing of this concept of universal bank that also does a lot of things, including selling insurance, right? So that's been happening for a very long time. The second thing that I'm going to say is that, however, the point of distribution or the pressure point which determines the distribution channel, that has shifted. So my question is, why can't, and I'm giving very Indian examples so that our audience can, relate at a very personal consumer level, right? I mean, why wouldn't we think of, let's say, something like Cult Fit, right, as an appropriate channel for insurance distribution, right? If we are moving towards this holistic concept of wellness instead of just somebody that pays you money when things go terribly, horribly wrong, right? So I think the pressure point of where distribution can happen, that's moving more towards lifestyle as a vector and data as a vector. Where do you get data? Where do you have this concept of holistic lifestyle, and where do you find those intersections, right? The other thing that I'm going to say is that the customer is not a monolith, right? There will be customers who will want human intervention, agent intervention at each and every stage. There will be other customers who will want digital touch points at most stages, right? The challenge really is, how do you unify those sources of data, and now how do you build consistency across those different experiences that people may have across their lifespan when they're holding a policy, right? So in some ways it is classic omni-channel, the dilemma of omni-channel consumer experience. So how do you unify those data points, and how do you deliver a consistent experience to the customer, irrespective of the channel? I fully agree with Nimesh's point around how do we use technology to take away the mundane, right? And instead train the agents to be more of a life coach, right? As consumers and customers go along the way. I think, again, there are still ways to go, but that's clearly the future. That's the direction in which we want to head, and which many companies are headed today.
Thanks, Chirajeet. So, Nimesh, coming back to some of the points that you mentioned, right? And that kind of leads me to my second question as well, which is life insurance tends to be sold once. Obviously, you've got extra coverage and riders during the way, but the insurance companies typically don't seem to have that information. Are there any specific technologies which can help insurance companies be more in touch with customers? For example, mobility, social media, and stuff like that. And are you using that within LG to any extent?
So it is about building relationships, right? So as you think about this and you really look forward, you think about why is it that you want to interact with a customer. There was a point in time when you didn't want to interact with a customer, right? What do you want to remind them? How much premium they have to pay so they don't want to pay it again? And you don't want to do that. But now there is more reasons to interact with a customer, because the financial vehicle that they're buying is not just a death vehicle. There's other things. So really to build that relationship so that they know when to use the product, because the product can be used in so many different ways. So this is the way that we at least try to use ours, is to make sure that we've got the ability to interact with the customer using their channel of choice, right? Not everybody is going to want to interact using a mobile device. Some of them will want to call, some of them will want to use something else. What are all the different channels that you can keep in touch with the customer? And what we're trying to do is not to promote the product itself within the social media and other things, but to talk about what needs are available and things that can be solved using financial vehicles like life insurance. So those are the types of ways to maintain relationships with the customer, and I think it's more touches over the time, because on average they say a life insurance, you know, the touch points between a customer is no more than about 3 times during the entire relationship with a consumer. And I think we need to move from 3 times to the relationship to 1 or 2 to 3 times a year. A lot of agents don't do annual reviews, right? Because they don't have time. They're busy filling out paperwork. If they don't have to fill out paperwork, guess what? They'll have time to do annual reviews. So getting to that life coach and having those relationships is the next thing that's going to happen. And I think it's already starting to happen. It's happening across the globe, and it's going to happen even more at a faster pace now.
Yeah, interesting. So Chirajeet, you know, I keep getting these SMSs and emails from my life insurance company. I won't tell you which company it is, but so where are we from a connection perspective? You know, again, the same question. Should insurance companies use more technology? Should they be more in touch with the customer, or do you think it's pretty much optimum at this stage and you should leave the customer alone?
I think the real trick is what value are you adding, right? I mean, it's not about how many times I talk to you, right? I mean, you know, that's just either cynical selling or stalking, take your pick, right? But are we adding value to the customer, right? I don't need 100 text messages to tell me that, my premium is due, right? I've got an alert set up on my system anyway, right? I don't need people trying to sell to me all the time, right? I mean, all of us have been through those experiences. But if somebody can tell me, right, hey, we're just wondering if you are thinking, what are your financial plans? So here's how a conversation might go. What are your financial plans? Oh, I'm thinking of investing in a property, right? Are you taking a mortgage? Yeah, most likely, right? How do you think about insuring that mortgage, right? Do you have adequate coverage? What do you think, right? So maybe that's a value additive conversation, right? Or, your kids are growing up, right? So, I think your kid's going to turn 15 or 18, right? What do you think about that, right? So I think if you start having that kind of a conversation where you really build intimate relations, right, with customers at a very human level, that's when it starts becoming value additive, right? The thing is, we spoke about triggers, right? But those triggers have to be ingested, identified, right? Also at the insurer's end. It's not just the customer's triggers are for the customer only, right? But how do we try and anticipate those triggers? How do we build data around it, right? How do we, start becoming a little smarter and a little more human and a little bit more real, right, in this whole life coach conversation?
So I think what both of you are really saying is be more contextual to the customer, right? So at this stage, I want to ask you guys a question. In your view, what do you think is the largest insurance policy that's ever been sold? And I'll give you a few options. It's a little bit of an unstructured question. So is it less than 10 million? Is it 10 to 100 million? Is it 100 to 200 million? What is the answer? The largest insurance policy, life insurance policy ever sold, and this is Guinness Book of World Records data. Any guesses? Less than 10, 10 to 100, more than 100. That was easy, isn't it? What's the actual value? Yeah. Well, if you tell me the value, I'll tell you the person. Okay, so everyone's keeping quiet. So according to the Guinness Book of World Records, the largest life insurance policy ever sold was in 2014 to an American billionaire, and that policy was $201 million. Obviously, the person's name is not disclosed because of what Chirajeet said. All those emails and SMSs would go to the person, but that's the Guinness Book of World Records. Okay. So we come to our third module, which is, so if you remember what we talked about knowing your customer. We talked about reaching for your customer. Now, the third very important aspect is caring for your customer. So care for me becomes a very, very important aspect of this. So let's look at some aspects of care for me. Now, we've done a prototype within Entity Data where we've used the metaverse and the mixed reality spectrum to set up a village for Alzheimer's patients. Now, my grandfather had Alzheimer's, and when you have Alzheimer's, you're bodily extremely fit. You can do all your functions, but you forget your way. And what these Alzheimer's patients really need is a lot of exercise. So they need to meet their near and dear ones, they need to talk to people, they need to have a walk. But if they forget their way, they can't get out. They're confined to their rooms. So one of the things that you can do is stack up a virtual village in the metaverse where they can see their near and dear ones. It's a more immersive experience. And there's broad statistics which says that it ups the life expectancy by about 12 to 20%. So just imagine the claims that would typically get triggered because these people live longer, claim prevention happens. So how do you really stay connected with your customer 24/7? And you've seen some of the Indian examples. Aditya Birla Capital just got out a a policy where they use Fitbit data. So if you do your 10,000 steps, you get a discount on your premiums every year, up to almost 100% of your premiums. So it keeps you fit, it keeps you alive, prevents a claim from happening, and you get rewarded for good health. It's a very, very interesting ad. The entire use of chatbots and AI is another interesting paradigm, and this is again something that we've done. So just imagine, the number of seniors in the US has increased. These are people who are more than 85 years. And how do you really care for them? So we've got these pattern detection cameras. So if you've got Peter in his home, he's fallen down, the form reduces in 2 seconds from 100% to 20%. You know he's had a fall. Alexa wakes up, asks a question, Peter, are you okay? Peter doesn't respond in 2 minutes. There's a 911 call, and then Peter's helped for. So just imagine the connection that builds with the insurance company and the care that's meted out to Peter. So another great example of some of the stuff that you can do with technology. I think this concept of consolidation of relationships and enterprise-wide loyalty has been there in financial services for a while. Why not in insurance? So my wife's got a Tata AIG policy. I've got a LIC, life insurance policy. I've got a car insurance from ICICI. I've got a health insurance from HDFC Ergo. What's the incentive for the insurance company to consolidate all these relationships? Are they really missing a trick here? Why can't I take everything from a multi-line insurer? Now, obviously, there are implications from a back-end perspective because the investment that you do is a different game altogether. But just from a relationship perspective, there's a lot of consolidation and aggregation that's possible. So again, why are insurance companies not really capitalizing on this? And then sustainability. I think everyone talks about it. Nimesh and I were having a conversation on the pollution levels and how they've increased. And there are a lot of insurance companies that are saying we're going to plant a tree if you buy a policy from us. So is sustainability really greenwash, or are insurance companies really taking sustainability in a very serious way? So I want to debate some of these questions, and Nimesh, I'm going to start with you with the first question. And this is the entire area of regulations, right? So regulations have a big impact on life insurance. A lot of us invest because we get the tax breaks with regulation. What, in your opinion, is the importance of regulations in life insurance? And I'll have a follow-up question on that as well, especially specific to NLG. But first, this one.
I think regulations is a double-edged sword, right? It's the old Spider-Man saying, with great power comes great responsibility. And I think regulators, I truly believe, are probably trying to do the right thing, and that there's side consequences to every action that they take. I honestly believe that if a company is chasing and making sure that they're being compliant with regulations, it's too late. Regulations kick in at a time when something goes bad, right? And they follow usually something going bad. So let me give you an example. When cars were first invented, nobody thought about regulating lights and seatbelts. It is only when there were volumes of cars and there were accidents that a regulator said, I think we need seatbelts, and I think we should have some lights because cars are crashing and people are dying. Well, people already died. So at some point, we have to start thinking ahead of the regulation if you truly believe in the best interest of a customer. And our company, there's a kind of a value statement is do good, be good, make good. It's like do the right thing by the customer and everything else will be okay. And I think regulations is a little bit about that. And if you're trying to keep up with it, I think you're going to be in a bad spot. If you're trying to stay ahead of it and doing the right things, it's very easy to comply with the regulations. It's not such a hard thing to do. But they are double-edged swords. So some of the things you have to work with, some of the things are not in your best interest. I mean, I just heard about this. My friends on the WhatsApp text messages were asking me of the impact of the new budget thing that's come out in India, which says the claims, the money that you get from your life insurance policy will be taxable, which kind of defeats the purpose of having life insurance to begin with. So one line of a regulation could wipe out an industry. So what is the consequence of that? So those are the things that we have to think about and saying, what are some of the consequences and what are the things that we have to make sure that we're creating products, we're creating our processes, we're creating our technologies to be ahead of what might be coming from a regulatory perspective.
Yeah, Nimesh, if I stay with you, again, I think the NLG Group has done a great job in reaching mid-market America. And, if you look at the Indian market, we struggle in terms of insurance penetrations, more so with life insurance rather than PNC. Are there any lessons for the Indian insurers to increase reach and penetration, especially in India, and especially when you look at the mid-market? What are the implications of that?
With National Life Group, one of the things that we say is we serve Middle America, and that is the most underserved segment of the country, and it holds true no matter where you go. Even if you look at India, Middle India is probably the most underserved segment of the country. As you think and we think, why are we doing this? What is it? What makes sense? So at the end of the day, when you think about Middle America, if we were to meet all our sales and financial objectives, we would have tapped maybe 2% of the market. The market is so big when it comes to Middle America. So what I would say is for the Indian life insurers that are looking at Middle India, I would call it, it's a thing about making sure that you're creating that customer experience that Middle America needs. Because you cannot be everything to everybody. And if you're trying to serve a market in a different way, for example, I'll give you the car, right? If you're going to Middle India and trying to sell them Ferraris, nobody's going to be able to afford to buy one. So you have to build a product around it. You have to build the right processes around it. You have to create the right experience around it. But most of the time, mistakes that companies make is they take what they have and they try to shove it into a different market. And that doesn't work. You got to build for that market, and that's the piece of advice that I would give.
Interesting. Chirajeet, staying with the first question, which is really in terms of regulation, what is the impact of regulations on life insurance? Any thoughts?
No, I'd agree very strongly with what Nimesh said, right? So, regulations are lines in the sand, right, that should always be in our heads to begin with, right? If you are if you are fundamentally doing the right thing by the customer, right, you're probably going to be all right, right? At the same time, I think it has a number of implications in terms of how industry structures evolve. How do you think of technology, right? How do you think of data? How do you think of security, privacy, right? And those are all questions that we have to wrestle with. So this whole thing around data, for example, right? And, I'll give one more personal experience, funny experience, if you will, just to show that it's not just about technology, right? So, as an industry analyst, I think of when I hear this concept around privacy, data protection, security, etc. So I think of it as educate and inform, right? So when you're seeking data from a customer, it's not buried data usage, is not buried 30 levels deep in your paperwork or your website, right? And it's not like a software license agreement, which is unidirectional, right? But it's up there. You're really trying to educate the customer with the customer's best interests at heart, right? Then you have to think about how do you really gather that information in ways that you don't compromise privacy. So you anonymize, you aggregate information and data. And then, of course, you secure that data. It could be data in rest, it could be data in motion, right? You have to encrypt it, you have to, do all sophisticated cybersecurity protocols around it, all the good stuff, right? But all of this really fails, right, when you don't have the right ethicality at the heart of your organization, right? And that's going to be my story from an Indian insurance buying consumer's perspective, right? So again, my wife and I, we are buying insurance, right? We get a call, my wife gets a call. It's like, oh, we are trying to reach your husband. And they were trying to reach me. I was in a meeting. We were trying to reach your husband. We know that you were trying to buy insurance. You have just, we are doing this promotional offer, blah, 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 right? Just to give us your PAN card and bank account details, we are going to give you a significantly reduced premium, right? My wife, somehow some trigger went off in her mind, and it was very plausible because I think we had just purchased insurance, or we were in the middle of purchasing insurance, right? So how does that kind of data goes out, right? But something luckily went off in her head, and she gave me a call and said, hell no, right? I mean, this is a complete scam. So that's the level of data compromise that we're talking about, and unless you have strong culture as an insurer, you are able to secure human beings, forget data, right? First secure human beings, right? And that's where the true challenge lies. And that's where I'll try to bring it back to Nimesh's point, right? That try to do the first thing, try to do the right thing, right? Try to do that first and try to do that consistently, try to do that at scale, right? And then all the other stuff starts falling into place.
So Nimesh, coming back to this entire thing about variables and the use of variables to give certain incentives. I'm not saying discount premiums, but give them incentives. Where do you think that is going? And do you see any challenges from a regulation perspective?
Wearables started a while back, right? This is not anything new. It's probably 5+ years old. But when I talk to companies that are doing that and say, are these products profitable? They sound more gimmicky today than they are anything else, right? Because so when we look at variables, what I struggle with, so this is my own personal opinion, not even National Life or anything else, is my own opinion is, what is the problem that we're trying to solve? I'm not sure the problem is clearly defined with wearables. And until we figure out what the problem it is that we're trying to solve, then we can start instituting, whether it be wearables, it could be something else, some other piece of technology. But right now, it's not really clear to me as what we're trying to solve with the wearable. It's more around marketing and having a little bit of gimmicky stuff around doing this. There's another concept which I'm not sure in the Indian market if it exists or not, but at least in the US, it's something called adverse selection, which means I can't do something special for you for any reason. You have to be a part of some kind of a group or something so that we could do this. So in other words, if you have a wearable, and we talk about the positives, okay, which says, hey, if you exercise, you've done your steps, you've done this and that, you get a discount. Well, what if you didn't do 10,000 steps for the next month and you put on another 10 kilos of weight? Do I charge you more? Well, it works both ways. So you can't do that. You can't go the other way around. So these are things right now that I think when you think about the wearables or you think of IoTs, I'm trying to figure out what it is that the problem that we're trying to solve. Because IoTs have amazing use in lots of different industries. I mean, think about farming. IoTs have come a long way. I've got a friend who has a company where they've invented something where you put it in the soil, it measures the moisture in the soil, and then starts deploying water based on moisture levels and the climate so that you're not wasting water in irrigation, because farming takes over most of the water in the country. It's not human consumption. So if you can do things that you're protecting the planet with this, or you're doing things that make it more better for the environment, sustainability, for profits, for whatever it may be, there's a use and there's a problem that needs to be solved, which is water wastage. So I guess with the life insurance, I ask people, what is the problem that we're trying to solve with IoTs? I'm still struggling with it.
Interesting. Chirajeet, I'm going to skip this question for you, just in the interest of time, and I want to open it up for audience. So if you've got any questions, we're going to have the mic, which is going to be circulating around, and I'll direct this question to our panelists. So I see a hand out there.
So my name is Sandeep, and I have been having this question for last 17, 18 years in my mind. So I took up a policy, life insurance policy, from one of the companies which is providing in India. And at that time, the regulations were not very high, and the management fees and all totaled up to 5%. But in future, IRDA came into picture, and that all went down, and it came down to maybe anything, 2% or 2.5% or maybe 1.5. So my question to the company was, I am your old customer, I am your loyal customer. Why are you not reducing my policy charges? It never happened. And as soon as my policy came for renewal, the company people started calling me, not not renewal, it is about to, I am about to get all the money. And I just got back the whole money. The moment I am about to get the money, the company people are calling, sir, there is a better life insurance, you take this and you do this. After 20 years of suffering from that company, where they promised me on a minimum you will get this, I am getting half of it just because my policy charges were very high. How can that company expect me to again go for that insurance with them?
So it's a very unique situation, I must say. And what you're basically talking about is the overheads, right?
Not necessary overheads. A company, why an insurance company is not really ready to think about its customer.
Right. Any of you, Chirajeet?
So, my simple answer to that question is, the market is big enough and customer is king, right? And switching costs are getting lower and lower in insurance. Information is much more easily available, right? I mean, if it's not you, it's probably thousands and hundreds of thousands of customers. And this is how companies lose competitive position in a competitive market.
Yep, I mean, I'll answer your question. At least with National Life, we believe if you're not serving your customers, somebody else will. Yeah. Right? That's how the world works. However, I'll answer it in a different way, which is the back end of how life insurance products work, right? There is a little bit of complication, then it sounds a little simple. Because I do agree with what you were saying here. But when you buy a life insurance product, there's financial things that need to happen in the background in terms of investments, long-term, putting money in so that we can have the money to pay it back when a customer needs it. That's, managing the assets, making sure there's options, there's futures, things that have to be bought on a financial side so we can back that life insurance promise that we've made to the customer. So there are certain periods where we have to be locked to the fees, we have to be locked to the things that we have to do. But as markets change, new products come out, that's when you serve the customer, and you have to be able to say, and I do believe that that is where your life coach, your agent comes in the picture to make sure that they're talking to you and they're saying, look, when we did this, this was the best thing out there. But today, there's something a lot better, right? You wouldn't want to drive a car with a carburetor today, just because you bought it 20 years ago. Today we have fuel injection, you've got better cars, and you should switch it. So that's, I think, the value also of an agent, and if they weren't participating in this game, they made their money and left, so I would say shame on them.
Yeah, I echo what both the gentlemen said. I think it's a question of really, that's where the agent comes in terms of explaining to you, right? But more importantly, if they're not doing that, just imagine the reputational risk that the company has. One satisfied customer creates 10 satisfied experiences. One dissatisfied customer creates 1,000 dissatisfied experiences. So thank God you didn't tell the name of the company, because everyone in this room would have avoided that company. So that's all I'd leave you with. Okay, interesting question. Any other questions? I see a hand out there near the camera. If you can get the mic. Okay, the lady first.
Hi, I'm Shakuntala from NTD Data. See, currently the insurance, whatever we buy in India or anywhere, it is specific to their country. So with the digital in the place now, so is the insurance industry is trying to cover global? Like suppose if I'm in India, I want to take some treatment outside India, like some other country. Is any background work is going on through this digital innovations and all?
I think the question is on health insurance rather than life. So the fact of increasing coverage beyond India, right now the insurers kind of cover the domestic market, but you've got a lot of population that's traveling now, going to the US and other places. Should insurance companies be looking at more?
Yeah, I mean, it's an interesting question. I'm not aware. I'll bounce it off Nimesh. You might be more aware of what's happening, but we are still kind of stuck to traditional insurance. I think the challenge here is that every country has a different healthcare system, and how do you build those bridges one country at a time, right? And how do you enable that kind of global coverage, right? And I think that's really, really hard, right? How do you enable that to happen with the NHS and then with the Blues? And I mean, in the US is anyway a federated healthcare system, right? So doing that is really challenging at scale, right? I'm not aware of an insurer that is actually trying to enable that through technology mediums.
Okay.
Hi everyone. My name is Paritosh. I'm from NTT. My question is for the insurance company, what will it take for them to stop rejecting the coverages? They can take all the data. They can take data from wearables. They can take data, medical records, everything. What will it take for them to stop rejecting any coverage, anybody?
Nimesh?
I think most of the companies, the way they're structured is you fit into a band, right? Based on your health, based on your financials, based on something, and that's how your premium is generated, right? So at some point, you cannot offer coverage to everybody just because, I'll give you a really, I would call it a hyperbolic example, right? I went to the hospital, I found out I had cancer, and now I want to go and buy a $200 million life insurance policy, right? That would be really dumb for the insurance company to be able to do that. So I think it's not coverage for all, it is based on risk and mortality. At the end of the day, an insurance company has to learn to manage risk, and the way they do it is by putting you in the right coverage band so that we're taking risk and we're giving you the best possible deal based on the risk that we're going to carry across the organization.
I think the regulators are becoming increasingly tough on this as well. So you've seen, if you look at 10 years back in India, if you had diabetes, it was impossible to get a cover. And now you've got specific niche products for diabetics. Similarly, you've got HIV positive, you've got niche covers for them. The question really is the premium that you pay for it, right? I've got a policy for my dad who's a diabetic. Pretty much paid 20% of the policy amount as premium, right? It's almost about ₹1,00,000 for a 5 lakh cover. So I think those are some of the constraints that we are really operating in. But I think in due course of time with the regulations in, it's going to become easier and easier, and it's going to become much better than what it is today. Chirajeet?
Yeah, I think it's a little bit of both. So Nimesh, what you said, look, at the end of the day, go back to the beginning of this session. I started my conversation around saying that insurance at its heart is an industry that operates on risk aggregation and risk arbitrage, right? And if you were to load up a lot of high-risk profiles in that portfolio, we create some very uncomfortable questions around, is that fair to the guy who's actually pretty healthy, right? So you have to manage that risk, aggregated risk at a portfolio level, right? So it's not an elastic band that's gonna stretch all the way to infinity, right? Having said that, we are seeing advancements on coverage, the breadth of coverage for niche areas. I think particularly in the Indian market, one of the factors, one of the things where I think we really need to look very long and hard is mental wellness, right? I don't think we have adequate coverage around that, right? And I think that's where we have a big gap in the market. At the same time, I did have somebody from, I won't name the company, but I did have somebody from, an agent from one of the insurance companies in India very enthusiastically trying to promote his product by saying, sir, we also cover suicide, right? So there you go, right? So, there are companies which cover suicide, right? It's just not a particularly appetizing selling point. And I think, so you have to look at it as a progression, but I don't believe we are ever going to get to a stage where we'll have everybody covered. The last point I'll make on that is the problem in a lot of markets like India is not just the premium that you end up paying, but you do how much of, particularly on health, right? How much do you actually get as a payout when you need it, right? So that's the other challenge, right? So sometimes there are products which look great, but there's so many riders in between, right? That even if you pay the premium, you may not end up getting the full payout when you need it.
Okay, I think we got time for 2 other questions. So let me go right at the back. If we can go right at the back, just want to be inclusive.
I am Aryan. My question is like, by looking to the current situation in the market and the news which are coming about Credit Suisse and all, how do you see the industry for the next 12 to 24 months going on?
Nimesh?
So I'll answer that from more of a perspective that, from an international, maybe a US perspective than the Indian perspective out there. Insurance companies, when you pay premiums, they invest it, right? They invest it in multiple things in order to be able to earn that return so that they can pay people back. That's the whole, the way the model works. And they're very conservative in how they do that. They're not going to put money into risky propositions and so on and so forth to do that. However, you know, as the financial crisis, now I can't be, if I had a crystal ball, you know, I'd go buy a lottery ticket today because I know exactly what's going to happen tomorrow. But my perspective is that the financial industry still is pretty solid. You can see that happening. Look, the world has gone and come out of lots of crises, right? The pandemic happened to be one, but if you were around in 2008, the market collapsed. And we came out of it to the highest possible values in a few years. Is the market going to change and going to take a downward trend right now? Probably. I mean, it is pretty scary as to what's happening. We will recover. I think over averages, as you look through even 100 years, you know, there's ups and downs in the market, but we tend to go in and we tend to come out of it. But as insurance companies, at least I can speak for my own, is we're looking at saying, when these things go down, we need to come out of the other side much stronger. So rather than hunkering down and battening our ships and hiding for the next 1 or 2 years that there's market volatility, we need to invest in things like technology. So when the market does pick up, we're ready and we're ready to go. So I think we're seeing that, and a lot of companies take that stance. So hopefully from a technology perspective, because that's who we are all here, is you'll see insurance companies, the good ones at least, double down and make investments in areas rather than going the other way around.
So Chirajeet, I'm going to pose this in a slightly different way. So with the recession fears and what's happening in the market, do you see does size really matter? Do you tend to go more towards the LICs of the world rather than the smaller players? Is that something that one should, just a word of advice for the audience, if you were an advisor?
Good thing I'm not. But yeah, I think the only thing I'll say is that try to assess your own needs, right? And don't think of it, I mean, do your research. Today you have great information available at fingertips. Talk to people, talk to professionals. I think, there's a flip side to information democratization, which is the undermining of experts, because today everybody is an expert. That way, I ended up reading the web and got convinced I had 20 deadly diseases, right? Because felt like I had all the symptoms. So do your own research, do talk to experts, and try to understand products, not brands, right? What works for you. That would be my best advice, really.
Nimesh, you have a view?
Old adage, sometimes you talk about what does size matter. I look at it and say, this is where regulations come in. because from an insurance perspective where we live, it doesn't matter how big or small the insurance company is, the same regulations. And the regulations dictate how much money you have to keep in order to pay people back. Right? That is not something that is negotiable. You can't play with that. So as you think about it, and do you want to go with a big company? Do you want to go with a small company? I think people give you both sides of the coin answer. Sometimes you look at it and say, the bigger they are, the harder they fall. And sometimes the smaller ones are nimble enough to get away with a lot of different things. So I think it becomes a personal choice. Do you believe in the valuation of that organization, and do you trust the people that run it? That's sometimes the bigger answer you have to follow. Is this the company that does the right thing? And at that point, is size more important or doing the right thing more important?
Yeah, it's interesting. You were telling me a story yesterday on the NLG group and how the founders really honored their commitment even if they had to take a loan, right? Do you want to say a little bit about that?
Absolutely. So we were founded in 1848, long, long time ago. That's 175 years this year. And when the company was founded, there wasn't 50 states in the United States. And the founders had, a few years, they had a claim. And a person passed away in California. If you go look it up, and you can Google, fact check me here, California was not a state in the US in the year 1849. So what happened was, the company's founders could have said, hey, well, we're a national company and you're outside and we don't need to pay you. But what they did was they did the right thing. They didn't even have the money to pay the claim. They actually went and the founders took a loan on their personal assets and they paid the claim. And that's the integrity, I think, is more important than sometimes worrying about the size and worrying about what it is. I think if you're working with a company that has high integrity, it'll work out in the long run.
Thanks, Nimesh. Last question. The lady out there. So, guys, if I have not given you a chance to ask the questions, you can email the questions to us. We'll share our email ID. I think we're going to send you an email ID which you can email the questions, and we'll be happy to answer those for you.
I'm not sure whether it is very much towards digitalization of insurance or not. So I have came across one of the ads in TV for a life insurance saying that, oh my God, my husband is dead. It would be great if he had given a life insurance to me. Is this type of a negative marketing? Because I was shocked to see that ad, and to give a, and I was not very sure why these type of advertisements are coming for life insurance, saying that my husband or my father or anyone would have given me a life insurance, and then when he's dead or he's expired, I should get the benefit out of it. Is this a negative marketing? Because I don't agree to it.
So, Chirajeet, we won't name the company, but obviously, fear marketing, is that what this is? And should insurance companies get into this?
Honestly, I think it's easy to judge, right? But let me tell you this. There are the two most powerful ways to influence human beings, right? Are either to excite them with a vision, right? Or to scare them, right? These are without doubt the two most powerful ways to influence human beings, right? Happens in, what do you think of technology marketing, right? So how do you sell a cybersecurity platform? Can you get a business really excited about cybersecurity, right? It's going to lead you to double your company's top line, or it's going to give your employees unheard of experience, right? Can you do that with cybersecurity, right? So how do you sell it, right? You sell it by showing that if you have a breach, you are going to lose X hundred millions of dollars. So that's how you sell cybersecurity, right? Any cybersecurity guy in the room? No? But that's how you do it, right? How do you sell life insurance, right? it's a little bit similar. I can also see the other side of the picture, and I think you have a strong opinion on that, and I can see where you are coming from, because, you know, nobody wants to be reminded of really bad, horribly unpleasant things, right? But I think, you know, we need to realize that mortality is real, right? As much as we hate it, it's real, right? It happens to all of us, right? And life insurance is just one way of being ready for it.
Chirajeet, Ankur here. Hi. Can I extend part of your answer to him? So I'm Ankur. I run head marketing for entity data. And what you spoke about is fear marketing, like this. Now, the thing that you need to think about is fear marketing. There is a tasteful way of doing it. There is a tasteless. That's up to the insurance company who is coming out with something that you feel is tasteless. But fear marketing has been there in place for probably half a century, because there are some things where you need to jar the senses of the person to actually realize you need this thing. And fear marketing kind of, the only way you can get past is that, you know, you kind of please, or you kind of take that fear away. And the only way you take that fear away is you actually take the product. So think of it in actual sense. Someone who has no insurance has commitments, and that person has, unfortunately, if a person like that, you know, there is a death in the family, then the other person has to fend for a lot of things. So will that help? Will that kind of an advertising, however tasteless it is, will that help someone at that point in place get something back? I believe it would. That's one way of looking at it. There are many different ways of advertising also. I mean, there was a very famous cold drink brand in the days when we used to run reels for movies. They inserted a small little photograph of that single bottle of cold drink, which your eyes wouldn't catch, but subliminally you would catch it. And that is called subliminal advertising. That is banned. So there are there are advertising regulators also who take a look at such content. And there are some which plays with your psyche which gets banned, like the one I said. But this one in some way will help people. So let it be.
So I'll just stop by giving you 60 seconds. And I was talking to Ritika. She's a marketing expert. You know, she's kind of helped put this together, the entire event as well. So I was talking to her, and she told me a very interesting thing. She said, the fact that you're remembering that company and you're talking about it in this forum means the company's done its job in advertising. So think about it like that. You know, the purpose of the ad is to get brand recall, and you've created that brand recall with all of us. Okay. All right. So I think we've had a very, very interesting session. I want to, you know, thank the panelists for all the insights that they've shared, and I want to just end it off with one last question for both the panelists. So my first question, Nimesh, to you. What is that one thing that you'll advise insurance companies to start doing, which they're not doing right now? And as a follow-up, what is that one thing that you'll ask them to stop doing, which they're doing right now?
Okay. Start doing, pretty simple. You know, make sure that you're building relationships with your customers. You know, don't be the cable company. So that's the one thing that we need to do more of and completely do. I think what we need to stop doing is stop making our things so complicated. You know, keep it simple, but simple is hard. And I think that's what life insurance industry has to take away, is keep it simple, stupid, because that's what this is all about.
Thanks, Nimesh. Chirajeet, one thing to start doing and one thing to stop doing.
One thing to start doing is, I'll just say, look at data. Look at everything that you can do with data. At the end of it, at the heart of everything in the world today in insurance, we have data, right? So I know everybody's doing a lot about it, but just double down, triple down, quadruple down, what you will, right? One thing stop doing is stop selling what you have, start selling what the customer needs.
Thank you, Chirajeet. Thank you, Nimesh. Thank you very much. You know, I was noticing that none of you looked at emails. None of you whispered in the others' ears. So I want to really compliment you guys for being a fabulous audience. Really, really want to compliment you guys for the great questions that you sent our way. Again, if we've not answered your question, it's just because of the paucity of time. Send it our way and you'll get a response. I also want to take this opportunity to thank the panelists. I've learned quite a bit. I've learned a lot in terms of how digital transformation can really help and the entire concept of humanization. So I want to thank Nimesh and Chirajeet for coming all the way from Gurgaon, and Nimesh from flying all the way from the US to be a part of this conversation. So give it a clap for both the gentlemen. Thank you very much. And we hope to have many more sessions. And then just a call out for Bhaskar and his team, and Ankur and Ritika and others for organizing this. Thank you so much. With that, we adjourned.
Thank you, everybody.
Thank you, panelists, for this interesting conversation. May I now request Ankur Dasgupta, Vice President, India Marketing in Global CSR Entity Data Services, and Bhaskar Verma, Regional Head, NASSCOM Karnataka, to present a small token of appreciation.
Thank you, Niraj. Thanks a lot. Thank you very much. So very insightful. Thank you so much. Thank you. Thanks for having us. Come on. Thank you.
Bhaskar, may I just request you to present from our side as well?
Okay. This is a small token of thank you. Small token of thank you. Thanks, Rudy.
Thank you, Bhaskar. Thanks, Ankur. Now, I would like to invite Mr. Sandeep Venkatesh Kulkarni from NASSCOM for the closing remark.
Thank you, panelists, for the insightful conversation. As we come to the end of the tech series on digital disruption in the insurance industry, it's clear that the technology is rapidly transforming the way insurer operate and interact with the customer. I think there is no doubt that digital innovation is reshaping the insurance industry landscape. Looking forward, it is likely that the pace of change will continue to accelerate, and the humanization is a key, and the technology is an enabler. So as we look forward to the future of the insurance industry, let us remember that while the change can be challenging, it also presents an opportunity for the innovation and growth. Let us embrace the digital disruption and use it to build a brighter and more resilient insurance industry for the years to come. Thanks once again for the panelists. Thank you, Entity Data, for partnering with us on this tech series. And thank you all for joining for the today's session. Thank you.
Thank you, Sandeep. Thank you, everyone, for joining us for this session. Thanks to all the panelists. With this, we end today's session and look forward to many more such events. We have arranged for lunch, so request you all to join us for the networking lunch. We hope that you all have a great time today and that you take away many valuable insights from the session today. Thank you.